Hey everyone, what's up? I made this video to do a fast explanation of the Fibonacci retracement tool. Okay, I'm using MT4 right now, so different platforms got it different places, but on MT4, this is the Fibonacci tool. The Fibonacci retracement is this one right here. Okay, this is the Fibonacci retracement, and I'm gonna show you how to use it. Now, if you don't see this up here, what you can do, just leave the cursor here and right click. And when you right click, you go into customize. Now in the customize section, this is where you got all of the tools. Okay, so you scroll until you see Fibonacci retracement. Now you click on it. Well, mine is already in, but you click on it. When you click on it, you click insert. So when you click insert, the tool goes in here, and after this happens, you simply close this. So mine is already in here. So I'm gonna show you how to use the Fibonacci retracement tool. It is a tool that it's a tool that's very important, and it has some very strong percentages that price seem to respect. Okay, so it's a tool that is very challenging for people who are new to Forex learn to understand. So I'm gonna make a short video. I hope you understand it. I'll try my best to explain properly how to plot the Fibonacci tool, retracement tool. Okay, so close this right here. Okay, so the Fibonacci retracement tool is used mainly to know when to enter in a trend continuation. Okay, like for example, I'm on the H1 right now. Okay, and if you were here, if price was around here when you saw the trade, then you know that's a definite downtrend. Okay, you know that's a downtrend. That's a strong downtrend. This here is a strong downtrend. But how do you enter here? Then you'll be stopped out, because then price went back like over 100 pips. Price would have moved against you over 100 pips. So yes, it's in a downtrend. As you can see, the price continued back down, but you could have lost a lot of money. So the Fibonacci retracement tool helps traders enter a trend at the best possible areas. You understand? The Fibonacci tool helps traders enter a trend continuation at the best possible areas on the chart. Now, what happens is that if you see a trend is going and you want to enter for the long term, most likely you have to wait for a retracement to happen. A retracement means that yes, this is a downtrend, but then wait for price to move back up a little bit. And when price moves back up a little bit, then you enter at some level on the Fibonacci retracement. Okay, so here's what we're gonna do. We're going to draw Fibonacci retracement, because this is clearly a downtrend, right? So how you do this is you click on the icon. If you're looking to go for a downtrend, if you're looking to enter on a downtrend, you have to plot the Fibonacci from the moves from the last relevant high to the last relevant low. If you're looking to enter on an uptrend, you have to plot from the last relevant low to the last relevant high. Okay? So I'm going to choose this one first. So I plot, so it's a downtrend right now. I want to enter on a bearish trade. So I'm going to plot my Fibonacci retracement tool from last relevant high to the last relevant low. What do we have here? The Fibonacci price retraced all the way back to the 50% on the Fibonacci retracement. Now, the 38.2, the 50, the 61.8, they are all very strong zones. They are very strong percentage numbers on the Fibonacci retracement tool, and price respect the zones. Now, there are some traders who may have 70, 78. You'll find that if you want to add it, you can always search all the videos. But the thing is, I don't use these percentages, but other traders do. So you can always, you can always get a second opinion. But what I'm telling you is this: the 38.2, the 50, the 61.8 are very strong zones on the Fibonacci retracement tool. So what happens is that price goes down, but you're waiting for an entry, and most likely you're waiting for a 50 or 61.8 because they're much stronger. Sometimes the 38.8 works very well, but as you can see, price arrived here and went into a small consolidation, and then it moved up. So if you're waiting for price to hit the 50 or the 61.8, but most likely the 50, then you'd be in a good trade, because see what happened. See what happened after price did that. Let's suppose you entered here. As soon as price reached here, see what happened. You see what happened? And it dropped further. So what you could actually do was, you could have actually taken profit right here, because it's like another level. You see price bouncing off here. So because price bounced off at this level here, you could also take profit here, and this would have been like a 90 pips with very minimal drawdown. Like drawdown would have been like 10 pips. You enter here, and you exit here, 90 pips. You exit here, 90 pips. And it still continues to go lower. But what this shows is the power of the Fibonacci retracement tool. How price respects the percentages on the Fibonacci retracement tool. And that's very important. Now sometimes you may enter the trade here and it goes against you. So what some traders do is that they enter the trade on the 50, but their stop loss is like just above the 61.8. Okay? Just above the 61.8. Now someone will say, but on my chart is like that's like 40 pips. Yeah, that's 40 pips. But 40 pips is not much if you're using proper risk management. Like if you got $500 to trade with, but you're only using 0.1 or 0.07, 0.08, then 40 pips is not a big loss. It's not a big loss if you're using proper risk management. You understand? So it's not a big loss. You just have to use proper risk management. That's all. And as you grow your account, as you get better, then you get better. So I'm going to explain it again. to plot the Fibonacci retracement tool, you use when you're looking for an entry to enter on a bearish move, to enter on a downtrend, you plot from the last significant high down to the last significant low. Alright? So for this area, it was here to here, and you wait for price to hit most likely the 50 or the 61.8. That's what you do. That's for downtrend. If you're looking to enter on an uptrend, okay, you plot your Fibonacci from the last significant low to the last significant high. So let's suppose all of this never occurred, okay? So we're around right here. We're around here. So we are here, and this is a clear uptrend, okay? It's a clear uptrend, but we want to enter on the uptrend though, but we do not know when to enter, right? So what we do is we take a Fibonacci retracement tool. So for an uptrend, it's from the last significant low to the last significant high. From here, plot this. Okay, like this. Okay. And let's look at it again. Once again, as you can see, price respected the 50 area. It didn't touch it, but you know, common sense would tell you that if you see the move, you see how this candle kind of engulfs this area. So it's a clear indication that the trend is heading back up. So your entry most likely would have been there. So it did not trigger. If you had a buy limit right here, it would not have been triggered. But I'm saying common sense would tell you that this candle that envelopes all of this here would signify that the trend has shifted and is continuing to go up. So your entry would have been after the close of this candle right here, and this would be your entry, and this could have been your first take profit here, and this could have been your next take profit here, 179 pips. So if you don't understand, you can also leave comments on under the video to ask any questions or anything you'd like me to go over. I'd gladly go over it with you. Okay, so once again, when you're drawing the Fibonacci retracement tool, if you're looking to enter on an uptrend, you take it from the last significant low to the last significant high, and you look for the percentages of the 50 and the 61.8. They're very strong percentages. Other traders may have other opinions. It's all good. If you're looking to enter on a downtrend, you take it from the last significant high to the last significant low, and around here would have been your entry. And see this. So this is how you use the Fibonacci retracement tool, and it's a very powerful tool. It's a very, very powerful tool. As you can see, price respects the areas of the Fibonacci retracement tool. So I'm glad I could help. I'm glad I could go over this and explain it. If you need me to make any further explanations, you can leave a comment under the video. Thanks.